Hello, everyone. Welcome to another exciting lesson. So, for today, we're going to be looking at what I call cryptocurrency trading. Yes, cryptocurrency trading. I know it's a popular term that many of us must have come across before. I believe you must have heard something like BTC, ETH at one point or another. But then, how can you trade cryptocurrency or how can you approach cryptocurrency trading? That is what I'm going to try to break down to us during the course of this lesson. My name is Benga and I will be the one taking us on the journey. So let's dive right into it. When we say cryptocurrency trading, you can trade cryptocurrency in two distinct ways. The first is spot trading, and the second is CFD trading. CFD means contract for difference. Now, what does these two things stand for? When you say spot trading, this is when you actually buy a particular cryptocurrency as an asset and you own that particular asset. That is, whatever value you buy, whatever number of the cryptocurrency you buy, you are the owner of that cryptocurrency until you sell it. Okay, so it is like owning an asset. Just like when you buy a house, you buy it, the document is in your name, then when you buy a crypto as well, it's a digital asset, right? So it is yours. You are the owner of that particular crypto at that point in time until you probably exchange it from or you sell it to another person. That is spot trading. Taking ownership of a particular digital asset can be BTC, ETH, Sol, and the likes of them. But when it comes to CFD trading, this is just you trying to speculate price. Okay, when let's say BTC was around $80,000, and you're able to speculate that okay, this BTC I think is going to rise to around 100K dollars. Then you take a buy entry around that $80,000, hoping that it is going to buy and keep going up and you keep making profits. Then you exit your position at a particular price as well. So in that format, you are not buying the assets as you're not buying the crypto in form of owning the currency, the cryptocurrency. You are only taking a buy position, hoping to close at another position and end up making profits from those positions you enter. All right. So that is how contract for difference work. So it is not like you are taking ownership of that particular cryptocurrency, unlike spot trading, which requires you to buy the digital asset, you take ownership of it, and then you can store it in your own wallet. You have a digital wallet that you must have created for yourself. Okay, so that is how the two forms of trading cryptocurrency works. All right, but then if you want to go into either of these, whether you want to be a sports trader, CFD, or both, there are things you need to understand. So we are going to look at some things related to sports trading. We have to know that there are different categories of cryptocurrencies. Popularly, we can say coins. Sometimes we most call them coins. All right. Now, if you want to be a sports trader, you want to buy some asset, digital asset for yourself in form of cryptos, right? You should note that there are some things that you should consider. There are some things that you need to know. Just like when you are going into a new business, you have to make your research. Now, to buy a particular coin or a particular cryptocurrency, you should look at some things. And those are the things that I try to break down here. The first thing you should know is market capitalization. When we categorize different cryptocurrency, one of the ways we can categorize them is by market capitalization. Now, What do I mean by market capitalization? This is the total value of a certain cryptocurrency in circulation at a particular time. So at a particular point in time, the number of that particular currency that is in circulation is what we regard to as market capitalization. And how can you calculate this? Market cap is simply calculated by the total number of coins times the current price. Okay, so if you want to buy or store a particular buy and store a particular cryptocurrency, you should actually know the market cap of such cryptocurrency that you are buying to own. All right, so and this capitalization, this market capitalization, we can broadly say we have two: a small or low cap, and then the large or big cap. Yes, some still say, okay, we have medium cap, medium cap. Yes, it is fine. But broadly speaking, we can just say small and low, small or low cap, and then we have large cap. So when you're talking about small, low cap coins or currencies, cryptocurrency, they are usually under $300 million. Okay, that is the value when you calculate the total number of coins times the current price of such cryptocurrency. You discover that okay, it is around $300 million. All right, so some of these include some coins that you know or you probably might not know. We have Drink, Zodi, Paradox, etc. And then for large cryptocurrencies, these are, large cap cryptocurrencies, these are cryptocurrencies with huge capitalization base. You'll be talking about the likes of BTC, ETH, XRP, Sol, Doge, TRX, and so on and so forth, like that. So this is one of the things that you should note when you are trying to own a particular cryptocurrency in form of a digital asset. So another way we can we try to categorize this coin is based on the project they represent. All right, so that is why you see some saying, oh, I have something called altcoin, I have what I call meme coin. It's just based on the type of projects that these things represent. Now for altcoins, alt is actually derived from the word alternative. Okay, so these are coins that can serve as alternative to major cryptos like the BTC. Okay, and these coins, these cryptocurrencies were actually created to address some of the shortcomings of BTC, like scalability issues, security risks, energy consumptions. You see, if you read up the projects of some of these altcoins like XRP, Sol, you're going to see stuffs like, okay, trying to ensure easy distribution of, there will be a particular thing that that project focuses on. Probably it is easy distribution or wider acceptability, stuffs like that. So it addressed some weakness of cryptocurrencies, of BTC, let me put it that way. So that is what most of these altcoins try to achieve. That is their purpose. So that is what their projects are based on. So when it comes to meme coin now, these are just coins that were created due to social media trends. Okay, a particular slang might be trending now, then before you know it, they've created a meme coin. In regard to that, you see that it pumps so well, before then eventually it might dump. So you should know that if you're trying to buy a meme coin now, you should know that buying a meme coin should only be for a short-term basis, because most meme coin at the end of the day, once they pump to a particular price, after the trends, the fugazis surrounding the promotions and everything, it will eventually most likely drop back to zero. All right, where there's a point you bought at let's say the rate of $5, you held until it got to like $10 per coin of whatever meme coin you bought. If you do not sell after a while, you see that probably price will drop even below the market open price when that particular crypto was actually launched on centralized exchanges. So you need to be careful of what to buy. That is why you need to understand the kind of project that such coin represents. Is it a meme coin? Is it an altcoin? What's the market cap? So those are the things you should focus on when you are trying to buy a particular crypto and you are hoping to hold it for a long period of time as an asset. Now, the second aspect of cryptocurrency trading, which is trying to buy from a particular position, take profit at another position. These majorly focus on technically analyzing the market. Okay, now based on your understanding of all this, you should be able to know that, okay, I want to trade a particular cryptocurrency. What should I focus on? I want to focus on cryptocurrencies with huge or with large capital base. Okay, these coins, they are going to move based on demand and supply. All right, yes, everything moves based on demand and supply, but when you look at meme coins, for example, now they majorly move based on the trends, the noise surrounding the launch of that particular coins. Okay, sometimes after the pump, not even sometimes, most times after the pumps, you see a lot of dumps after that. So you cannot hope to be trading such coins when you are trying to be a CFD trader. Okay, you want to take a buy position or sell position so that you can end up making profit. So you should focus on cryptocurrencies with good cap base. You're looking at the likes of BTC, ETH. There's some altcoins like Sol, XRP, yes, Hada, and the likes of them. So when you are trying to trade like that, you should focus on major cryptocurrencies. Okay, you don't want to get stuck trying to trade meme coins or some altcoins with low capitalization base. All right, so now let's dive right into the technical analysis part of crypto trading. All right, so let's move right into the chart now. But before we start analyzing, there are things you should note if you want to trade cryptocurrencies. If you're someone that understands how to trade forex, or yes, you've been into forex trading, or you have no knowledge of forex trading, one thing is, whatever system of trading you have, okay, when it comes to the global financial market, as a technical analyst, okay, you analyze the charts, you look at the charts. The same system can be applied to cryptocurrency trading. You can only probably tweak one or two things, okay, but there's no difference between resistance and support in forex and resistance and support in crypto trading. They are the same. We are both talking about price, okay, demand. We're both talking about demand and supply. All right, so but then if you want to trade the cryptocurrency market, the first thing I will advise, the first step is always ensure to understand the current market trend. Understand the current market trend. That is the first thing. Understand the current market trend. Okay, so after understanding the market trend, understand market trend. Then the second thing you should note is mark your structure. Why the third one is look for entries. So these are just three approaches you can apply to trading your cryptocurrency. You don't need to complicate trading. Just keep it simple. First thing, understand the market trend. Second thing is mark your structure. And then the third thing is look for your entries. Okay, what I mean by market trend is try to look at it. Is this bullish? Is it a bullish trend or a bearish trend? This definitely now is a bullish trend. Now, mark your structure means try to mark, okay, do I have higher highs, higher lows, lower highs, lower lows? So that is what marking your structure means. Starting from this low, if you look at this high and this low, these were the two things, the last low and the last high. Looking at this structure while we were selling, this was a bearish trend before we started switching to a bullish trend. Now we've understood the fact that this is a bullish trend. Okay, but now I want to understand what my structure is saying. Okay, I have this high and then this low. So this low was responsible for the break of this high. So we went ahead to break this high. All right. So where was the last high that was created after that move? You go up and find a high. I think this is the highest price before we saw a major pullback. So the last high that was created before a major pullback, you can pick that. I don't want to focus more on the tiny details here. All right. Then, so we have this low, we have this high. So this low went ahead to break this high to create a new higher high. All right. And then this higher high, the pullback also, we created a new higher low. How? Why did I call it higher low? The low is higher than the one we had here. Then this high is also higher than the one we had here. So that's how we'll keep going. This low also was responsible for a break of this high. Then this was the highest point that we created, the highest point in price before a major pullback. So then we also saw a pullback. This was the lowest point. So we had this higher low. This higher low went ahead to create this higher high. There was a pullback. We had this higher low. This higher low too went ahead to create another higher high. All right. This higher high. This was the lowest point that we sold to. So this is also another higher low. We can see there was a break. If you look at it very well, you see that it's not a break. There was just a wick below. Price just wicked below this. So this candle did not close below this. So we can still regard this as higher low. So we expect this higher low to go and create another what? Another higher high to break this and create higher high until this low fails. That is when we can say now our structure is bearish. So clearly we can now see that this low and this high, this is the swing high and this is the swing low. This is what we are going to be working with. The low, this swing high and this low. So we are going to be trying to look for buys within this zone. So let's remove this. Number one, the first thing is we've understood what our market trend is saying. Then we've marked our structure. So marking your structure will enable you to understand, okay, where am I going to start analyzing from? Where am I going to start looking for buys or look for sell? In this situation now, we're going to be looking for buy because definitely we said the trend is bullish and the structure too is currently bullish. Okay. Now, one thing you should note about marking your structure is try to mark your structure on higher time frame. If you notice the time frame that I'm on here, I'm on the 4-hour time frame. Okay. The lower the time frame you go, the more the noise you're going to start encountering, and you don't want to get lost amidst the noise and all. So focus on higher time frame, marking your structure on higher time frame. Now, after marking your structure, yes, another thing you should do after marking your structure, is identifying your zones. Identifying your zones, or you call them key levels. Identifying your zones or key levels. Identifying your zones or key levels. So when I say zone, what do I mean by zones or key level? These are your zones of support or your zones of resistance. Okay. For example, now here I'll try to mark my support zone because I can see a push up in price here. It means there's a force line here, the force of buyers, which is the support level. So I'll mark the zone as my support level. Okay, which means if price should approach this level again, I'm going to try to take a buy. All right, so then even though you might think, yeah, let me wait for price to come around, you can still go to lower time frames like 1 hour, the 30 minutes, to see if you can see another possible entry option. Okay, but the first thing you must ensure is you mark your zone on higher time frame. Okay, you can now use any of the strategy to refine your entries. Okay, but when you are trading the cryptocurrency, the first thing is understand your market trend, mark your structure, identify your zones and key levels. All these should be done on higher time frame, and then you can now proceed to look for entry. So let's see some of the trades that has happened in the past. Okay, there's a trend line resistance here. There's a trend line resistance here. If you look at this zone, if you try to switch to a line chart, you can pick the zones perfectly with a line chart. Okay, line chart does not take into consideration those weeks, so this is the correct trend line. So if you look at it, you had a sell from here, a sell from here, another touch sell from here, and we should note that the more the touch of a zone, whether it's a support zone or a resistance zone, the weaker it becomes, which means at the end of the day it's going to get broken. If you missed this sell, which is the third one, this would have been the first sell that you would have entered. Let's say this is you place your sell entry here, your stop loss above a key particular high, and then let's say you target a particular low for TP. Okay, but let's say you missed this entry after the third touch. I always advise that do not take the fourth, the fifth touch, because the more a zone is being tested, the weaker it becomes. Okay, it is not the stronger it becomes, it is the weaker it becomes. So look at it, after the fourth touch, we also saw another sell, and the sell actually broke this low to create a new lower low. Yes, the trend is bearish, the structure is bearish, but then you should understand that this trend line resistance is already a weak one, so thereby avoiding trading this the fifth time. So while price was trying to approach here, a normal retail trader will say, okay, I'm seeing another touch, let me sell again from here. And look at what happened. Market broke out of that trend line resistance. Okay, and once you see a breakout, it means this resistance will now turn to support. So as soon as the breakout happened, price came back to retest, and then we started another buy, which means if you have been patient, if you're patient enough to wait for price to break out of that trend line, this would have been your next entry. You take your buy from here, let's say your stop loss below this swing low, and then you target this major high, then you would have made about 3% from this particular trade. So that is just a simple approach to trading crypto. So you don't need to complicate things. All right, number one, look at the market trend. Once you've identified that, okay, this particular cryptocurrency now, it has a very good market capitalization, then you understand the market trend, mark or identify your structure, identify your zones and key levels, and then look for your entries. So it is as simple as that. You don't need to complicate your approach to analyzing the chart. All right, so try to backtest as much as possible with your strategy. Whatever strategy you use in trading, you can still apply to crypto trading. Just make sure you take your time to backtest your strategy and see that over time it works. Okay, things that you need to fine tune, things that you still need to add to your strategy that you're bringing to cryptocurrency trading, add them. Then after you've seen a good result from your back testing, then you can start live trading. So these are some of the things you should note when it comes to cryptocurrency trading. So watch out for more videos like this, in which we are going to be talking about more topics as regard cryptocurrency trading and so many other exciting topics. All right. So thank you. See you in the next video. Bye.